The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to take a look here at the German DAX. You'll see that it had the big break and then, of course, had the rally back today, which is not unexpected because the market had sold off so very, very much. One of the questions that I received over the weekend is how do I handle day to day just after what we had Friday? And, folks, I handle it exactly the same way. I don't do anything different anyway. Simplicity trumps complexity, and by golly, I keep it as simple as possible. I'll show you a couple things that we were looking at last night when I did the video and stuff to alert the folks what might be happening. But that's basically what I do. I don't really do anything. I watched a little bit of the news because of the fact of this virus that popped out of the world very unexpectedly, if you can believe that. I still have 2 shares of the Brooklyn Bridge for you, but by golly, I'll tell you one thing. These markets are going to continue to be volatile, and I mean very, very volatile. Okay, let's get back to the one that I would be watching the closest. Okay, now here is let's just get this out here. I want to get the ones that I did before the market opened and everything. You'll see this is the video from last night. In the, hold on, you'll be able to see this is the crude oil. I was looking for a potential 382 rally up to that 38% level, up around the just a little above 72.50 and change. And that's what I was watching for. And so as I watched it form, and I'll get this up here so we can all see it together, you'll see that what we did was we came up and we went just a tad above the 382 by about, looks like about 40 pips. But we did make that 382 retracement. As you can see, we went up there and then we popped down below it. But what I was watching is as it went above the 382, what I wanted to do is I wanted to take it and look at it microscopically so that I get an idea where can I trade this crude oil where I don't have to give up an arm and a leg and maybe find a pattern that will give me some idea that, we could be at a place where I don't have to risk very much. And all I'm trying to do now is find the darn pattern that I have here, and I can't find it. Yes, it is. Got it right here. Sorry, boys and girls. Here it is right here. Hold on one second. Oh, let's get this on here. We'll get this done here. All right, here is this is that crude oil. You see, once it headed for that 73 level, all I was waiting for was to give me some indication that I wasn't trying to catch a falling knife. Now, you notice that red trend line coming down, folks. That's just a 135 pattern. You know, remember, this is a 4-minute chart, so it took a little over an hour and a half for that to fill. And you'll notice that the point to sell it was, of course, was the last high. But once it went below 172, we broke $2.50, folks, in just about an hour. That's $2,500. That's huge moves that we're seeing here. Now, I don't get all of that, but, I try to get a little piece of it, but I don't have to risk very much just by adding those patterns. These are the patterns that I talk about when I do the day trading course. Every one of those are the types of things that I'm looking at. Now, I wanted to do a few others because I think they're important enough that we really need to pay very close attention to them. And one of them here, and this is the one that I was doing this morning. I did it last night. This is the chart. Let me get this up here so we can see it here quickly. This is the chart of Amazon on a 15-minute basis. You can see here again on the 19th when we had the big move, and then look at the 382 retracements on the 23rd, 24th, and 26th, and then the market breaks down badly. I mean, there's a perfect example of using the 382 in your favor. I mean, you don't need any oscillators or MACDs or Williams lines or Keltner lines or any of those things. Just keep it as simple as possible and try to, handle your risk. That's what the whole thing is all about. At least that's my 2 cents worth. Now, here's what happened to Amazon this morning when it opened. Let me just get up here and show you. It opened right at the 382 retracement. You see it right around that. Actually, the high was, I believe, 35.58, and then we dropped all the way down to 35.30, and then just about a half hour right before the opening, it took off and shot all the way up to 35.70. But there again, what it's doing is it gives you a really good chance for putting in a place where you don't have to risk an arm and a leg. And there was very, very apparent, and this is another one we did last night because it was so very, very important. And just to show you the harmony in these markets and why the algorithmic traders are so darn important, here's the Dow Jones from yesterday, from the 25th when we had the big break. We dropped from 35,900 all the way down to 34,600. That was 1,300 points. That's the biggest drop we've had since Hector was a pup. That dog's 19 years old today. Anyway, if you look at this spot here where you see the first down red arrow, the red line, that's the 382. Look how it hit it. Hit it 1, 2, 3 times over the night. Once on Sunday night, again Monday morning, and against Monday right before the opening, and then we pop up, we go right up to the 50% retracement, and then bang, down again. And that's why these numbers are in these algorithmic trading, folks. You don't have to do anything you don't want to, that's for sure. I'm just saying they mean something to these people. Look at the crude oil, folks. If you don't believe this move in crude oil is important, let me explain something to you, okay? 2007, in September of 2007, Goldman Sachs, and I love Goldman Sachs, they put out a report saying crude oil, $200 a barrel, and it was on every tube in the whole world. And it was trading at 144 that day. Well, it had a slight sell-off. It went from 144 over the next 2 years down to, $30 a barrel, I believe. And of course, then it went back to 120, but that's how much it'll break. Now, those of you that are out there that are thinking that the Federal Reserve is going to be in there and saving your tuchus, and it's the first day of Hanukkah, God bless you all. Light a light for me on the Minerva. Anyway, the main thing that I wanted to mention here is the Federal Reserve is not your friend, folks. It's a private bank for bankers. You've got to remember that, because remember, let's just go back in history. Remember the 2000 dot-com bubble? Where was the Federal Reserve when the stock market dropped 85% in the NASDAQ? How about in 2008 when we had the problem with the housing and stuff? Where was the Federal Reserve when that was going on? Strange, isn't it? What they do is with the news and all this other stuff, and here again, I'm just looking at stuff that I've looked at for 60 years. And when you hear them say, well, it's different this time, that's the one thing you can be absolutely sure of. It's not different this time. So that's the main thing that I want to bring to your attention is be careful in here, folks, because any market that can drop $1,300 in a day and a half, they can take it all back in a day and a half, but they're telling you, be careful, be careful. It's like that, remember that fly with that Japanese sword master? Well, that's what you got to be careful of, boys and girls. We're going to take a little break. We're going to come back, and we are going to look at the dollar index. I hope.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I posted the weekly dollar index chart. As you can see, the multiple ABCDs that are here. We're up at the 50% level here in this dollar index. We thought it was going to stop at the 382, but it did not. And maybe it won't even stop here, but so far it has stopped at the 50% level. We've had a move of about 110 points in the euro over the last day or so, and I gave back 70 of those points today, and we'll cover that in just a moment. But the main thing is you've got to remember here that this dollar index is composed of 53% of the euro and then the other currencies. And we've had some incredible moves in the Australian dollar going straight down as it was forecast. That was talked about in the newsletter this week. And also the other one that we mentioned was the Japanese yen. And of course, the fact that the British pound came right off that 133 level, very, very important. Now, I'm going to talk just a tiny bit about COVID because it's in the news all the time. Folks, I know there's a lot of stuff out there. I'm just a numbers person, always have been. There's been under 6 million people die out of 7.3 billion. And if one of your family has been involved in that sequence of statistics and the death, I'm very, very sorry. There's no way to go. But most of the people, they get a little bit sick. Some of them very, very sick. But it's not devastating everybody like these countries are shutting down. These masks and stuff, that's not going to help very much. And I'm not even sure the vaccinations do. But again, I'm just an old cottonwood trader out of Terre Haute, Indiana. That's all I can tell you. So I'm just looking at that because it's what's in the news. I try to go beyond what they're trying to tell us in the news. And by the way, I don't know if any of you just get off the subject a little bit. If you saw Tony Bennett last night with Lady Gaga, he was 95 years old and he was up there still going strong. I mean, it was incredible. Knew all the words. I mean, it was really great to see him up there. I was able to be in a restaurant twice when he was having dinner, same restaurant. Patsy's in New York City on 5th Avenue. But the main thing, 232nd Street, 232 East 56, that's the address. Anyway, we happened to be in the restaurant, and he was there, and he's very, very personable and just a super nice guy. Very small. He's only about 5'3", but what a voice and what a class act. Okay, let's move on to another one that I wanted to to bring to your attention, of course, here, and that is the FTSE, because that's in the news. I want you to see what's happened here, because what we're going to be trying to do here is to find out, hold on here, right here. There we go. This will come up. See if that comes up. You'll be able to see that. So we've had a big break in the FTSE, mainly because of COVID is what they're saying. But I frankly, folks, you don't get crude oil to break what the high was at 85 when we had the 3 drive to a top pattern. Remember how everybody was telling us $100 oil? You remember everybody was telling us about 0 interest rates? If you look at the charts, they can lie to you, they can cheat you, they can give you misinformation, but they can't hide from you. If prices are going up, there's more buyers. If prices are going down, there's more sellers. Today is the first day where we've seen a significant down move in coffee after we hit that 245. And I'm sure Mr. Z was in there this morning telling you how he had his stop closer than Hades' hat. And we'll see if that's going to be the case enough, because we should have a pretty good correction after that big of a move. But since we don't trade coffee here, we're not going to spend a lot of time with it. Tim Boss will be our guest at the break here in a few minutes. He always has great information for us. This time he's going to be talking to us more about the cryptocurrencies. And frankly, folks, right after the first of the year, I'm going to add some things, charts and things into the Trade What You See newsletter covering the cryptocurrencies and stuff. I know John's done a great job of talking about it over the past 2 years, a little bits and pieces, but I'm going to be putting some charts in, just looking at the charts, because they follow beautiful patterns. I mean, at when it was 6,500 in the Bitcoin, it was a perfect 3 drive. We talked about it in here. From there, we went all the way down to the 382 at 28,000, and now we've been bouncing around between those two numbers for quite some time. Let me see. Tomorrow, who's our guest tomorrow? I can't remember. But we've got Jeff Hughes, I believe, is on tomorrow. And then Paula Webb will be our guest on Friday. And so that'll be an important thing to look at. Of course, for the 4th of December will be a state holiday in Indiana. It's Larry Bird's birthday, so everything will be closed. So if you have any questions, folks, it's 877-927-6648. I want to mention to you just a tiny bit more about the crude oil market, folks. When that market started to break, open interest was increasing. That was not just stop-loss selling. That was new selling coming into that market. And as you can see here, we've only been able to rally. We dropped, $12 a barrel, $13 a barrel in just a few days. Then we rallied back 5 of that. Oh, what would be 5 into 13? Oh, 382. And from there, we've dropped another $2 down. So it's just messing around in here. But when you see a big move like that in crude oil, that's flagged a lot of things in the past. 2008, of course. And even back in 1999 or 1991, when we had Desert Storm and oil was at 42, and everybody said it was going to go to 100. Well, on the day of the war in January, it went from 42 to 31 in one day, $11. How much that is? Like 25% drop in crude oil. That was almost like when it went negative. If you remember, a year or so, in 2019. I believe it was 2019. No, it was 2020 when it went negative because of the delivery problems. Anyway, we're going to, still got a couple of minutes here if you've got any questions. 877-927-6648. And that's pretty much it. Those were the main things I wanted to cover. The gold market is still heading down. We were able to short the gold at that beautiful 618 retracement at 1812. The high was 1815. It's now trading $30 under that, which is actually looking pretty good. We took some of the long out of that too, and then was able to reverse. They don't always, work out that way, but that one worked out, pretty nicely. Oh, the last one, of course, is the euro. Since we were talking about that, here's the euro. This is what we're looking at here. This is looking at the old 382. And it went right down there and went a little bit lower. Our stop was right below that 50% level. We're right about break even is where we are right now. And our stop is just below that. Now, there's a perfect example of all we're doing is managing the risk. Our risk on this trade now is under $200. And that's what we're watching. It may or may not work, But that's true of everything out there, because you don't know what's going to happen next. You will never know what's going to happen next, so don't even think about what's going to happen next. So focus in the now. Like the salesman says, sell what you have available today. And that's a key thing to remember. So it's all about risk control, folks. It's not about how much money you make. It's about how much money you don't lose. Let's see how we're doing here in these markets, because we still should be heading higher based on a couple little things that I'm looking at in here. We should start rallying in oil for the rest of the day, too, if it's correct. But we'll do that as we go through looking at some of these other things that we have today. Stay tuned for Tim Boss, folks. Financial Cycles Weekly.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Oh, my goodness. Okay, folks, we're back, and I believe we have on the line Mr. Crypto himself, Tim Bost, out of Bradenton, Florida. Hey, Crypto, what's up?
How are things in your part of the world, my friend?
We have a question. We have a question for one of our listeners, and this is a true question, so please answer it. He wants to know. No, it's true. Now, listen to me. Now, this is very important. As if I've ever said anything important. Anyway, okay. He wants to know, when you're sitting in front of your trading machine, are you wearing a cape with a big K on the front of the suit?
No, in fact, I usually am scantily clad, actually.
Well, no, hey, let's don't go in there. We'll be banned forever.
Right,
We got to be careful. That's, they, especially, well, anyway, let's move on here to talk a little bit about what you want. We got a solar eclipse coming up here on Larry Bird's birthday, December the 4th, I noticed. That's a Saturday.
Larry Bird's birthday, but it is.
Yeah. Well, if you were from Indiana, you would.
Well, who's I know these things, right?
Amen to that, brother. Amen to that.
Yeah, we've got solar eclipses, and what most people don't understand about solar eclipses is that they are relatively common phenomena. Whenever we hear about a solar eclipse, it's usually because it's visible in a local area, and the news media hypes it up a good bit, and so, oh my gosh, the first time in a million years we're having a solar eclipse or something to that effect.
Yeah.
But the truth of the matter is that we get solar eclipses at least twice a year, somewhere. They're visible somewhere on the planet. The trick is that they are only visible at certain areas of the planet. And so this one is coming up here on Saturday of this coming Saturday, on the 4th of December. It will be taking place at 12 degrees 22 minutes of the zodiac sign of Sagittarius. So if you've got anything connected with Sagittarius, you'll definitely want to pay attention to this one. But it's a very, very interesting event because of the fact that it's not very visible. The path of totality, this is a total eclipse, but you'll need to be in Antarctica to see that. So hang out with the penguins and you maybe get a glimpse of it. Actually, there'll be kind of a band of partial eclipse effects that will extend down into the lower tip of the African continent. They're in South Africa and maybe a little bit in Namibia as well. But outside of that zone, you not much chance of seeing it firsthand. I'm confident that NASA and folks like that will have things televised or online if you want to be able to watch the effect as it occurs. But the big point here is it is not visible for where most of us are, and it is, in fact, having an impact on the entire globe at the same time. So that's why we're interested in looking at these phenomena, because they impact geopolitical affairs, and they also impact the action in the markets, which is of interest to us in particularly here. Now, the other thing to understand about eclipses is that they occur in series, and there are a number of these series. This is a part of what's called Saros series number 152, and that began in the early 1800s. It is a series of 70 solar eclipses 18 years apart. So it covers several centuries, and we're still fairly new in that sequence. I've noted here the previous years over the last century or so in which we've had eclipses in this same Saros series from 1913, 1931, 1949, 1967, 1985, 2003 was the most recent one, and of course we've got this one coming up here near the end of 2021. So what this does is give us kind of a reference point. We can go back and look at some of the market effects of previous occurrences in the series. Now, the other thing with eclipses, we can kind of backtrack them in general. Again, we get at least 2 solar eclipses every year. So we go back with the S&P. We got 60-odd years of trading history, whatever it is there. It gives us about 120, 25 eclipses to study, and so we can get pretty good averages out of that. And this is the average response of the S&P 500 to any solar eclipse, not just ones in this particular series. And the typical pattern is that for about 30 days prior to the eclipse, there's a little bit of trading congestion with a slight bearish bias there. That 0 point in the middle is the date of the eclipse. And what we're interested in is what happens after that. We get a pretty good a jolt to the markets typically right around the time of the eclipse, and the general pattern is for it to go up for a bit. Now, this chart covers 30 days prior to the eclipse and 30 days after the eclipse. As we can see, for about the first 2 weeks, we get a pretty good move upward, a little bit of leveling off there, topping pattern, a slight pullback, and then that final 10 days or so, we've got another potential for a rally. The important thing about this chart is to see the little gauge on the left, the scale there. At the very top of the chart, the S&P is up by 1.2%. So we're not talking about, a 30% rally or something insane like that. It's a little nudge that eclipses give to the market averages, and so we like to be able to play that bias and look at other things along the way. So this is the general picture with solar eclipses, and what we've got here, a couple of examples of what has happened before with eclipses in this particular Saros series, the Saros series 152. The most recent occurrence was in 2003, November 23rd of that year. We had a solar eclipse, and again, these are in 18-year cycles, so it's been 18 years since that. We're ready for another one in that series, but the last time we had this, it marked a pretty clear trading bottom, and then we got a nice move upward subsequent to that. So we wish they would all be like this. They'd be real easy to trade, but unfortunately, they don't all look exactly the same way. This has been some of our most recent experience with this Saros series. So it encourages us to think in bullish terms after this weekend when this eclipse occurs. And we have to add that past performance doesn't guarantee future results, especially when we start to look back at the past performance from one of the previous eclipses in that same series. This was, which one? 1967. And we can see at that point, then these are charts for the Dow with our eclipse records here. We got a little bit longer trading history to look at with the Dow. So what we're seeing here is that decline into the eclipse, a little bit of a bottoming pattern just after that before the rally took off. It took about 2 weeks to get things going after the date of the eclipse. So it's not always a clear marker of a trend reversal right on the eclipse. Okay. But we did get a little bit of a run up then, and then the bear market resumed right after that. So it was a little break in the action anyway. Yeah. So this is the kind of stuff that we're looking at.
I have a question. That is, I read a lot of what Dr. Andrew Lowe from MIT puts out, and he wrote that book, Evolution of Technical Analysis, and he spent the first 50 pages talking about the Sumerians and Babylonians, how they were using mercury and eclipses on these stone tablets for figuring out where the price of wheat was going to be, what the crop was going to be like. I mean, that's pretty good acclamation for astrology meaning something, isn't it?
Absolutely. My cuneiform skills are fairly weak, though. I don't know.
Oh, okay. Hey, stay with us, Tim.
We sure will.
We'll be right back, folks. Tim Boss, Financial Cycles Weekly.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, we're back, folks. We're talking with Tim Boss, Financial Cycles Weekly, and now we're going to be talking about everybody's favorite, Bitcoin.
Okay.
Well, it seems to be there are more people.
Anyway, right?
There's more people. There's more people trading that than there is anything else, from what I understand. I mean, it's a pretty big deal.
It really is. It's interesting to observe how this phenomenon has developed over the last decade here. It's been very, very curious to see the amount of skepticism about it, the concerns about legality and so forth.
Yeah.
And it's taken a while to get a well-established market in gear. Mm-hmm. A couple of years ago, we worked with some of my colleagues here, Bill Meridian and Gonzalo Moreira, Christine Skinner, to put together a little anthology of astrological opinions on Bitcoin, and it's called appropriately Bitcoin Astrology. One of the things that we tried to do with that book was to track some of the cycles with Bitcoin, and there's definitely a bullish phase toward the end of each calendar year that seems to hold up pretty well. But the caveat here, of course, is that all of our research was based on very, very few years of actual trading experience. So we like to do back testing with the markets, and we prefer to have more iterations to work with. So it was kind of a tightrope act that we did with that book. It needs some updating and revision, and that will be coming. But in the meantime, we're continuing to watch the market with Bitcoin, and we like to use our planetary price lines as projections for support and resistance. This is a chart going back about a year here with the action in Bitcoin with daily price bars. And what we've done here is projected a couple things on the chart. We've got our fourth harmonic planetary price lines for Venus, which is something that most people have heard about. One of our planetary neighbors here. Those green diagonal lines mark the paths of Venus there. And you'll note over on the right-hand side that coming up fairly soon, we've got this little dip in that line, or the parallel green lines. That's Venus going retrograde, which will be happening a little bit later next month. And so we'll be paying attention to that and its impact on Bitcoin as well. The horizontal purple lines are for the trans-Neptunian Transneptunian factor Chronos, also projected in the fourth harmonic. And we found that Chronos in both the fourth and the eighth harmonics works very, very well for helping us understand key levels of support and resistance for Bitcoin. And so that's something that we continue to track. And various astrological students and traders who use astrology with Bitcoin use different methodologies. This is the one thing that we found consistently gives us information that most other people don't take a look at, with that Transneptunian factor in play as well. So what we've also done here is taken that high that occurred in July. At that point, it was an all-time high. Of course, that's been exceeded since. And that downward move, again, right between those bands provided by the planetary price lines from Chronos. And we did a little bit of a Fibonacci projection with that, the horizontal red lines there showing the various Fibonacci retracement zones coming out of that. So right now, we've got Bitcoin trading at just around the 57,000 mark. When I did this chart a little earlier today, it was at 56,964. I'm glancing here at seeing about 57,200 and change. So it's hovering right around that 57,000 mark, give or take a little bit during today's trading. But what has happened that's gotten everybody's attention is over the last couple of weeks, there's been a big sell-off in Bitcoin and a pretty sharp plunge after it seemed that it was going to try to really give a solid breakthrough to a new all-time high. It did that, in fact, but what we found was that Chronos line at 64,544 really provided an effective resistance zone for Bitcoin, and it backed off to that. So right now we're paying very, very close attention to that thicker purple line across the chart there at 55,544, which is the first harmonic projection for Chronos. It's a very, very powerful zone of support. It did in recent sessions drop below that, but it's been hovering above it now. So we're watching that price zone, especially if the support holds there, then we could make another shot at another all-time high. If it breaks below that, the next level down is the Fibonacci retracement, the 61.8 level there, which kicks in at 51,074, I believe it is, something like that. So we'll be combining the two tools, the Fibonacci retracements as well as the planetary price lines, to gauge effective levels of support and resistance. And then the other one that we want to pay attention to is a little farther down. At the planetary price line with Chronos is at 46,544, and we're seeing the Fibonacci 50% retracement on this chart at 46,455. So that's close enough for me. It effectively duplicates that potential support zone there. So that becomes very, very critical if we do get a significant break below that 55,544 level.
Mm-hmm. Well, it certainly hit these support lines just absolutely spot on, it looks like. I mean,
it has proven to be pretty consistent there.
Yeah, it sure has. And it tells you which direction of the trend is. You got higher bottoms, higher tops, so the trend is still up.
Exactly.
Yeah.
So, we remain long-term bullish with Bitcoin. Personally, it's something that I'm buying and holding rather than trying to trade very actively. But there's lots of volatility here. If you're interested in active trading, you can have a lot of fun with this one, as long as you understand that your money's totally at risk and this may not actually be money. So there you have it.
Hey, Tim, do you have any free webinars coming up for the folks?
We do, in fact. We are planning a webinar for later this week, and we certainly want to encourage folks to to join us for that. We're going to be focusing on some of this solar eclipse analysis as well during that session. We've got an access to check out there. Go to bit.ly/Tim Larry P, all lowercase except for the T, the L, and the P. Capital T, capital L, capital P, everything is lowercase. That will get you to a little sign-up form, and will keep you on track with this upcoming webinar and everything else that we got going on.
Yeah, that's really great. We're going to have you on in a few weeks, probably sometime in December, since we've only got one more day.
Yeah, we got a few hours of November left, so we'll take a shot. Maybe
we have to give you the sound of one hand clapping, buddy, because the last 4 times you've been on, you have nailed these markets just absolutely spot on. So, as we say here in the trade, it's like the restaurant business. The first time you have a bad meal or a bad recommendation, we'll say thank you very much, but no thanks. Now, Jimmy, you know that I'm just kidding, but we love you, and we're going to see you sometime in December. Okay, buddy?
Absolutely.
Have a wonderful
great weekend.
Have a wonderful solar eclipse
we got this
too,
Monday already. Okay.
Amen to that, brother. Hey, we'll be right back, folks. 877-927-6648. Yep.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. You want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage. The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
Okay, folks, I'm back, and I posted the chart we were talking about just about the time that the show started, right around 11 o'clock. You'll notice that we were making that ABCD pattern right there, and the S&P down there at 46.25. Also, just for a point of interest, you'll see that green line is actually a 382 retracement. And that's the kind you really like to see, because you know that you don't have to risk very much at that point. So when we have volatility like this, and we're going to see more and more of it, that's what I'll try to do, is to show you these, and you'll get in the custom of looking at them. And sometimes they work, sometimes they don't. But by golly, they work pretty well, as most of the people that use them can attest to that. It's been a nice day today as far as the one in Treasury bonds that we had. Right down at the top and then also at the bottom. And then we had a nice, tremendous move in wheat. The wheat made a 61% retracement overnight on Sunday night and actually stayed there at 8.55 for about 15 or 20 minutes. And now it's down trading at, last I saw was around 8.21. I believe it should have been bottoming right there. Let's just see how close we came to the bottom in that, and we'll just get this going. Yep. Well, the low was 8.20 3/4, and we're a little bit above that, not much, but that's it. Now tomorrow, I believe we're going to have just one second. Joe DiNapoli on Thursday for sure. Friday is Paula T. Douglas Webb. She'll be there, and then Shane will be J.C. Parrots. Will be J.C. Parrots from All Star Charts will be on Wednesday, and Tuesday, tomorrow, we have Jeff Huge of Alpha Insights. So we got a full week this week of some really great analysts, and they'll be able to add some great information for us. Live every day in an attitude of gratitude, and may God bless. And make sure you do something for your neighbors, folks, because a lot of these folks could be looking at it. Mr. Bill, check with TFNN on that. But if you can't get it, Mr. Bill, email me and I'll put you in touch with Timmy. We love you guys. See you later. Bye-bye.